A few videos back, I created a video in which I demonstrated a profitable rule-based trading strategy which uses a 2-to-1 reward to risk ratio. I showed you the results for how that strategy works on some daily Forex charts. Now in the comments, Robert Frank asked me how this strategy performs on 30-minute bars rather than daily bars. So that's exactly what we're going to look at today. A simple strategy with a 1-bar setup on a 30-minute chart which uses a 2-to-1 reward to risk ratio. That means we find the stop loss and then we place our profit target at 2 times the distance of that stop loss. I'm going to test the exact strategy across 10 of the larger Forex pairs. We'll look at the results and then I'll choose the ones which the strategy works better on and I'll try and improve them further still. But firstly, let's recap on what the setup for this strategy is. Some of you guys are already going to be familiar with this smash bar setup. What we're looking at here is a long setup and the opposite is going to be for short. But let's just quickly recap. It's the same setup whether we're looking at a daily bar, a 1-hour bar, or in this case we're testing the 30-minute bars. So a setup for long. First of all, we want to see the close less than the previous low. So here's the close and it's less than the previous bar's low. Once we see that, that's our setup to go long if on the next bar, this bar here, the price breaks above the high of the smash bar. So buy the smash bar high on the next bar. The stop loss is simply the low of the smash bar. And then for the target, easily to calculate because we're using a 2-to-1, it's going to be double that distance for the target. So the target is going to be up here somewhere. And like I said, the opposite is for short. For example, this bar here is a smash bar set up for a short trade because the close here is higher than the high of the previous bar. If on this next bar here, the price comes down and breaks below the low of this smash bar, then we get in the trade. The stop loss would be the high of this smash bar. Like I said, and like you may have seen, in that previous test, that previous video, we were using daily bars. But in this video, we're going to be using 30-minute bars. But there's no reason why we can't test any bar size. Surely it makes sense that if the setup works well on one bar size, then it should work on others. Well, hang around because you're about to find out. Here I'm using Multicharts' Portfolio Trader, and what that allows me to do is test a multiple of markets. You'll see the markets down here all on the 30-minute time frame and just one strategy, and it allows me to do this at the same time. Although strictly speaking, I could quite easily do this just in multi-charts, but it would mean that I would have to have a load of separate charts for each instrument. The testing we're looking at is from January 2010 through to my data is up to date to the end of October 2022. So let's have a look at the performance report. This equity curve shows all the 10 Forex pairs together, but it doesn't actually mean much because we've got different currencies in there, so don't take too much notice of this. What we want to do is look at the individual ones so we can break down the symbols, and this is going to show us individually the equity curves for each of the markets. So let's quickly run through those. So Australian dollar, US dollar, pretty good equity curve. Euro pound, not good at all. Euro yen, not very good. Euro dollar, well, it was working up till about 2016 and then has gone a little bit flat. Pound yen, not very good. Pound dollar, not very good. New Zealand dollar, US dollar, not very good. US dollar, Canadian dollar, not very good. US dollar, Swiss franc, again was working up until or maybe 2014, but then just not working at all since then. And lastly, US dollar, Japanese yen. And that's a really nice looking equity curve, isn't it? So obviously works quite well on that pair. So I think it might be worth having a closer look at 3 of these pairs. Remember, it was Australian dollar, US dollar, Euro dollar was okay, and definitely US dollar, Japanese yen. And remember, for this test, we're using just a 2-to-1 reward to risk ratio, and we're taking all trades all day long. So every trade which comes along, we're taking. And we can see that by the look at the amount of trades. We've got 15,500 trades. That's a lot of trades, but that's because we're using 30-minute bars. Now we're going to look at those three pairs or those three markets and see if we can't improve the results further still. And I'm going to use two ways to do this. Number one, I'm going to look at limiting the amount of signals per day which we take, or the amount of trades per day. So at midnight, as the new day begins, I'm going to set the computer to say only take 2 trades or only take 4 trades per day. We'll test to see which works best, and then all it will do is it will take the first 2 or the first 4 trades which come along after midnight. Without limiting the amount of trades, we could take up to 8, 9, 10 trades per day perhaps using the 30-minute bars, because there's lots of signals generated using this pattern. And the second way is similar. It's limiting the amount of trades, but in a slightly different way. The previous way takes the first signals or the second or the fourth signals which come along after midnight. So it takes every signal after midnight as soon as they come along. Whereas the second way that I'm going to limit the trades is use a time window. And I'm going to select that time window. For example, let's say I only want to take the trades between 9 p.m. and midnight. So between midnight and 9 p.m. we wouldn't have taken any trades. Hopefully we'll find a time of day where the signals lead to better profits. The signals are more significant. But just before that, if you see the value in using these kind of rule-based mechanical strategies, then I've got a free giveaway for you. At the moment, you can get my 22-page Beat the Market Strategy Guidebook, free to download, and I'll leave the links down in the description down below. And in that, I give away 3 more proven mechanical trading strategies. I lay out all the rules and I lay out all the testing results. So if you're looking for more rule-based strategies, then go and grab that, because I think you're going to really like it. But better still, if you've already got the guidebook, you can enroll in my popular trading course, and in that you'll actually find 6 more profitable rule-based strategies. If you're already a multi-charts or a TradeStation user, I even give you the code. You can upload it into your trading platform or copy and paste it and have a play with the strategies and maybe improve them further still. But don't worry if you're not a TradeStation or a multi-charts user. The strategies are simple enough to trade using a regular trading account. So just looking for the rules on the charts manually and placing the trades manually as you normally would. I'll leave the links for the course down below too. Okay, let's have a look at improving the strategy across these 3 Forex pairs. The first of those shortlisted pairs I want to look at is Australian dollar, US dollar. And currently you can see we're taking all the trades and at all times of the day. But let's have a look, see if there is a best time of the day to start taking the trades. So I've run an optimization, and you can see with this input here, my start trade. If I start taking trades at 0000 or midnight, that allows me to take all the trades all day long. And you can see from the total trade number, we've got the most trades. If we only start taking trades from 500, that's 5 a.m, we can only trade from 5 a.m. through to midnight that day. So we don't trade this first 4 or 5 hours. Now, looking down the results, looking at the net profit, we can see that some of the better numbers are through here, the best being 1800, 1900 has a better average trade value, so does 2000. It's definitely better. Look, the average trade value is 10 compared to taking all trades at only 2, so an average trade of nearly 5 times as much. So let's select trading from 1900 through to midnight. And look at the performance report. That's what the equity curve looks like. That's pretty nice, isn't it? Making 36,000. That's pretty good. So that's an improvement over taking all trades all day long. And you can see on the chart now, we've got far less trades because we're limited by that time window. I did actually try limiting the trades per day, not using a time window, but the results weren't very good, because essentially all that does is, if I say I limit 5 trades a day, it starts trading at midnight, and once I've hit 5 trades within, let's say that's in the first 7 hours, it stops trading. And we can see by doing this optimization on the time window, we can see that the better trades, obviously for this pair, come from 1800, 1900 hours through to midnight. Let's have a look at euro dollar. And I've run that same optimization on the start trade or the start time. And taking all the trades, 28,000, moving on a bit, 2 AM, 3 AM, looks like it's about the best. We can choose either of those. Let's just choose 200 for now, it's 2 AM. So we're hardly limiting any trades at the moment. Let's have a look at the performance report. We know it's got 36,000. Equity curve, still not great, is it? Especially in those later years. Let's run an optimization on the amount of trades per day now. We go from 0 to 8. And looking at the net profit, most net profit is around 3, but the average trade is lower than 0. Actually, 0 is actually 1 trade per day. What it's saying is, the way that I've programmed it, I'm saying that we can only trade if we've had 0 trades or less. So we can take the 1 trade, and 1 saying we can only trade if we've had 1 trade or less that day. So it's going to be actually 2 trades. And I think a compromise between the average trade and the net profit is probably 1. So that's saying that we can only take 2 trades per day after 2 AM in the morning. And the equity curve is actually looking nicer now, isn't it? That's definitely working better in later years, so that's quite pleasing. Let's have a look at the last pair, which is dollar yen, and let's optimize that time at which we start trading. So from 0 through to 2300, again, looking at the net profit, highest net profit is about 1 AM. Looking at the average trade size though, it's actually best. Again, later in the day, a bit like Australian dollar, US dollar, and we are struggling a little bit with the average trade size. Although we had a great equity curve, the average trade size is a lot bigger at 1900, so let's just select 1900. Equity curve is still nice. I did actually test the limiting the trades per day, but as with the Australian dollar, US dollar, limiting the trades is only going to allow us to trade shortly after midnight, whereas we can see that the best trades on this pair, like Australian dollar, US dollar, they come much later on in the day. Now we've found 3 Forex pairs which all have pretty good equity curves and some decent net profit. However, there's one huge issue which we're overlooking here, and keen viewers would have probably already worked this one out. I haven't included any trading costs yet. Costs such as spreads, commissions, slippage, etc. So now I'm going to include 4 pips worth of trading costs for each of these strategies and have a look at the results, see if we have a big enough edge in this strategy to overcome those trading costs and leave us with some decent profit too. Now we're just going to go through each of the 3 pairs and adding 4 pips worth round trip of costs. In this case, when trading 100,000 units or 1 full lot, it's going to be equivalent to $20 or $40 round trip. And then we're going to have a look at the equity curve. And that's what happens to the equity curve. That's because we've got a low average trade value. So let's carry on and look at the others. Same story with euro dollar, unfortunately. On US dollar, Japanese yen, it's actually equivalent to 2,000 yen or 4,000 round trip. And unfortunately, it's the same story. So the same story across all of those pairs because they all have a low average trade value. The impact of costs is massive. And you really need to look out for this. Look out for it if you're testing a strategy yourself or you're looking into somebody else's backtest. Make sure costs are included, or you understand the impact of costs or how much the costs are going to be, and you can factor that in when you're analysing the trading report, looking at the size of the average trade, for example. Trading costs have a much bigger impact on the shorter term trading strategies, like the one we've looked at today. This is because most of the time we're not in the trade long enough to capture a large enough move to overcome the trading costs and leave us with some profit. And this is the reason which I often encourage my students to focus on the longer time frames. Then you can have strategies which last a matter of days or weeks. Holding trades for days rather than just hours gives us a much better chance of capturing a larger move and thus overcoming those trading costs. But if you do want to day trade, you want to try and get in early and leave the trade running for as much of the day or as much as a session as possible to capture as large a move as you can. The longer you're in a trade, the bigger the move available for you to ride. Perhaps we could use this strategy which I've shown today on some longer than 30-minute bars, 8-hour bars, 12-hour bars perhaps. Maybe that's for another video. Let me know in the comments if you'd like to see those results too. Anyway, thanks for watching until the end of the video. Robert, I hope you're still watching, and I hope that's answered your question about whether this strategy works on the 30-minute bars. I hope the rest of you guys have found it useful too, even though this time I haven't given you a strategy which you can go away and make some money with. But keep watching these videos because there's plenty more to come. If you've enjoyed it, please give it a thumbs up and subscribe for more videos like this. And until next time, this is Jared Goodwin, and thank you.